Alright guys, so I'm going to do a quick market review of today's price action, including the trade I took on the ES this morning. So let's jump right into the chart here, and what we see is that first of all, we can notice from this daily chart that we had a weekly profile that resembled something like a seek and destroy. Now this is a profile known as the seek and destroy bullish Friday, right? In which case we had a broadening formation for the entire weekly range, and therefore I traded with that expectation on the Friday in a bullish stance due to the previous day's closure and what I observed in price. So let's take a look at the daily chart, and the first thing we're going to notice is that price yesterday during that large PM session sell-off came back into this internal range of liquidity on the daily. This is a daily fair value gap or a daily BISI, right? Okay. Inside of this daily fair value gap, it's important to note that we also formed an SMT divergence at the Monday low with the YM. So if I bring up the YM chart and refer to that, you'll be able to see the SMT with the YM at Monday's low. Okay? So this SMT in here is important for our consideration, as if we want to move from internal range to external range with the draw on liquidity being higher, we want to see some characteristic like an SMT inside of this fair value gap to confirm that reversal. So what we want to do, right, in looking at this is look at the YM as well, in which case we're going to see this SMT form inside of that fair value gap. The reason I chose to trade ES at the exclusion of trading NASDAQ, which I usually trade, was simply due to the relative strength of ES that I had seen throughout the week. So if you notice, right, on our higher time frame charts, we can see that the NASDAQ actually formed a lower low at the 60-day lows several weeks ago, and since that delivery, it has been weaker to the buy side than the ES has been. The ES has been much stronger as an index, right, for the past couple of weeks. As we can see, it's closing much higher through this imbalance here in the market, right? Whereas the NASDAQ, if I can switch to that chart, right, close to this imbalance, but is still trading within the context of this volume imbalance up here. This same volume imbalance on the ES, you can see, has actually been closed through, which is right here. And we've actually repriced a daily BISI overlapping it. If you can notice, right, if I make this a different color, we have this daily fair value gap that's actually been repriced over this volume imbalance, which is a very bullish indication of order flow as we've inverted this volume imbalance and are now using it as support. So I look to frame a trade on the S&P. Let's go down to the lower time frame charts, like our 4-hour chart. And this was kind of the situation we were found at this morning before Federal Chairman Powell spoke at 10 a.m. As you can see, out of this daily internal range, we were sandwiched in between this displacement range from this high to this low. And we opened up at a key level, which I wanted to take note of, which is why it was actually bullish. So although we had sell side liquidity resting below in the form of Monday's low down here, this is sell side liquidity, the SMT with YM inside of our daily fair value gap, followed by the displacement, right, of the 6 a.m. candle through the equilibrium of this dealing range, right? The dealing range being from this low or this high to this low, in addition to closing through this breaker in the market, right? We can make this breaker a different color. These two indications alone made me more inclined to see if price would want to reach into the other side of the range, buy side liquidity, and essentially form a broadening formation like we talked about for the weekly profile, right? Taking out the highs, sweeping the lows, and then coming back and targeting the extreme end of the range once again. So my eye, right, was trained on the buy side, and I was looking to see if price could make a run higher today on news. So those were my characteristics on the 4-hour that gave me a bullish bias. In addition, as you can see, we had created several 4-hour imbalances in the form of buy-side imbalances, right, higher, which was showing the market was displacing higher, right, after it formed this SMT. So if we go down to the hourly chart, we'll be able to see a bit more structure and how I actually took this trade. So going into the session, we had 10 a.m. red folder news. What I observed was the following. We had, right, created a few down close candles on this hourly chart. These are going to be used, these opposing candles, as support as we had moved higher. So the market was keying off of these down close candles and moving higher, respecting this short-term bullish order flow. As we also said earlier, it was displacing in the form of creating inefficiencies, right, in the discounted region of market price, right, below this 50% of this dealing range, and also respecting these fair value gaps as we continued to trade higher. Another fair value gap was down here. So as we continue to displace higher out of these fair value gaps, I wanted to look for price to run into this buy side liquidity higher, using the news as a volatility injection in the market to at least come into this area of price. I also had this 4-hour change in state of delivery as a potential target for my position as well. So I'll annotate that as my 4-hour change in state of delivery. So moving into the session, I had two primary objectives: this 4-hour SysD and this buy side liquidity. As we notice, we can annotate this gap that was most recent to the New York session as our first hourly imbalance, or hourly imbalance of interest. And let's take a look at how I actually entered this trade. So moving down to the 15-minute chart, I was studying that we formed another SMT at these London lows with the NASDAQ, and I can refer you to that quickly if I pull up my NASDAQ chart. We can see that NASDAQ created a higher low and ES created a lower low in the London session. Now, despite that higher low being created on NASDAQ, the overall market structure was still bullish, and we had displaced on the ES, right? More in comparison, like I was talking about. So I was still looking for longs on the ES. And then I had a PD array of interest that I could key off of, which was this hourly internal range of liquidity. So expecting news to provide the volatility, right, and the liquidity injection, I set a limit order inside of this area that overlapped what I believe to be a breaker forming in the market right here. Make this a different color, right? This breaker forming and this fair value gap, right? On the 15-minute chart, I saw something very similar with this breaker in here, right, and this fair value gap that overlapped it. So I had a whole bunch of confluence in the form of PD arrays supporting price in this area right here. So I personally went long, as you'll see in my execution, inside of this 15-minute gap when the session opened. So I believe it was around 9:30, or maybe it was around 9:15. I'll have to show you my executions after. And then I was risking the SMT protected lows, and my first target was going to be, right, I wanted to see how price reacted to this 4-hour change in state of delivery, but I had it at this 15-minute buy-side liquidity up here. Was my first target. All right, let me just remove this. This is what I wanted to see, how the 4-hour reacted to this level. So my first target was this buy-side liquidity, and then my second target obviously was this, range high, this external range liquidity. As you can see, price very quickly distributed within one candle directly to my first TP, and then price continued to spool higher, right? Just barely meeting the buy-side liquidity on the ES. Now, I was fortunate enough to recognize and have alerts set at the previous day high on the YM as well, which, as you can notice here, right, puts in a sweep of this previous day high. So as we swept the previous day high on the YM, I was able to close out of my ES position near the highs as well. And as you can see, actually, YM also put in a double top near this liquidity right here, or a very shallow rate of it. So as YM closed through that previous day high, I was able to partial out one more of my contracts inside of this rejection block area. This is the rejection block. Up here. So I was able to partial at this rejection block. And then the remaining part of my position, right, was stopped out at break even as price reverted back to the range lows before forming kind of this seek and destroy pattern for the rest of the day. So I'll include with this video, right, an explanation or attachment of my executions as well, so it hopefully aids in this explanation. And yeah, I hope that makes sense. What I was framing today in the simplest form was daily internal to daily external. So on the daily chart, it was that SMT inside of our daily fair value gap down here. And then on the hourly chart, it was simply a continuation of that order flow utilizing a fair value gap as my PD array of interest, right, inside the New York session, and then using the volatility driver of the Federal Chairman Powell's speech, right, to try and target the range high. And yeah, I'll throw in my executions. Let me know what questions you have. I hope this made sense, and I'll continue to do these if you guys find them valuable so you can see how I'm breaking down my bias into my entries for each day that I trade. Awesome. Have a great weekend, guys, and I'll see you next week. Take it easy. Bye.